Hey friends, welcome back, or for the first time, to live cryptocurrency trading. So if you're unfamiliar with how I've typically run these in the past, I'm just gonna dive in and look at the markets and talk through how I'll bring in my true approach, sort of the trading ritual that I have personally when I am making trades myself in the cryptocurrency markets. And yeah, there's not as much news as there had been in the previous couple weeks because Bitcoin did not make all-time highs in the last couple days. It's actually pulled back. So this can be an especially great opportunity for cryptocurrency traders. And if that's not evident to you already, I'll talk about why. I should also make sure to mention that our cryptocurrency course, how to build abundance in cryptocurrency, is coming up. You can check that out in one of the links in the description if you're interested. And we're gonna try something new this time, in which we're gonna do a thing where the first 15 people to sign up for the course will also get a one-on-one personal session with me if you want to do that, to talk through your cryptocurrency trades, review them if you want to do that, talk about your strategy and your goals and so forth. We've never done that in the past. This is the 5th year we've run the course. So yeah, we'll see how it goes. But it's going to be beneficial. It'll help seeds out as well. I should make sure to mention the course sustains Seeds, our mutual aid cryptocurrency organization, so that 100% of the gifts that come through Seeds can go to folks in need, 100% of the value of those gifts. So when you join the course is effectively free when you pay up front because it includes Seeds cryptocurrency with your tuition, and it sustains Seeds so that we can help people in need around the world. So it's meant to be this like win-win-win situation. And again, if you're one of the first 15 people to sign up, we'll do a one-on-one personalized session with you if you're interested in doing that as well. All right, that's my plug. I have trouble with plugs, but I'm trying to get better at that. Trouble generally with selling things, but when it's serving a good cause, you gotta get over your discomfort about stuff like that, right? Okay, so let me hop into the graphs to start, and I'll keep an eye on the chat as well. So if you have particular things you want to talk about, let me know. Sorry, that shouldn't have been there. Okay. So for checking this out, we're looking at Gemini Active Trader. If that's unfamiliar to folks, the exchange is called Gemini. Let me just make sure this is still cool. Yeah, looks like we're good. What's up, Tintop? Hi, Jenny. Hi, Gabri. Welcome, everybody. Okay, cool. Yeah, so here we are in Gemini Active Trader again. I've talked a little bit about this in the past, but yeah, the reason I use this platform reluctantly is because I think it's like the least worst of the centralized cryptocurrency trading platforms. Centralized cryptocurrency trading platforms are those which essentially hold custody of our funds while we're using them. So we don't actually have control of any of the cryptocurrency wallets that we're using on these exchanges. And we know that, of course, because we don't have access to the private key or the mnemonic associated with these wallets on these cryptocurrency exchanges. But they're still a bit of a necessary evil because we are frequently going to want to trade fiat currency like the US dollar for cryptocurrency, right? Unless you're helping someone in need through Seeds, in which case you can give with fiat currency and receive Seeds cryptocurrency without having to deal with one of these exchanges, as an aside. But yeah, we still have to do that in most cases. And there's obviously a lot of regulatory structure around that, although it's not as clear cut as it ideally would be in the cryptocurrency sector in the US. So that's why we have to use one of these exchanges. When I say the Gemini is the least worst, like the graphs are sort of easier to engage with, I think, than they are on some of the other platforms. Kraken's another one I use. Coinbase is probably the best known in the US, I think. Um, yeah, but Gemini is shady, y'all. Like, I think the product is of good enough quality that I'm not concerned about there ever being like a breach or something. Or like, as I mentioned before, Binance got hacked in 2019 and like $41 million worth of cryptocurrency was stolen from their centralized exchange. I don't think that's going to happen with something like Gemini. So that's part of the reason I use it. but I don't trust them. I've been treated poorly by their customer service. Like it's not great. But like none of them are good is what I'm trying to say. So I felt like I should emphasize that more so. And that's part of the reason DeFi, decentralized finance, is more attractive, because then we're not sort of like subject to the whims of a platform like this. Slash, I mean, they're regulated, obviously, but that doesn't mean they're not assholes. And like I'm actually in the process of pursuing an arbitration case against Gemini because of like they sold cryptocurrency that they held, cryptocurrency of mine that they held on the platform at a specific time, when they confirmed it was going to be sold like the week before. And I ended up losing 27 and a half ether because of their error. So hopefully that's going to be resolved in my favor shortly, because I'd love to get that ether back. The point is just that centralized platforms like this can do stuff like that to us. So, like, proceed with caution. And as ever, when we're using them to make cryptocurrency trades with fiat currency, it's always a good idea to get our currency off of the centralized exchange and into a self-custody wallet that we control as soon as possible. And again, we know it's a self-custody wallet if we have exclusive access, ideally exclusive access, because you don't want to share this, access to your private key or your mnemonic device, for that wallet, and you want to store it in a safe place, and so on. Yeah. So, all right. Having given that spiel, yeah, let's take a look at what's going on in Bitcoin. I think, let's see here. Let's also take a look at the news. Um, so I have our Discord pulled up again, the news channel on our Discord, because the feed here includes um, notifications from Cointelegraph, which is one of the biggest cryptocurrency exchanges. Looks like the photos are broken though, so we'll have to see what the reason for that is. We also have Google alerts for the word cryptocurrency, so this should be pulling in all news literally relating to the word cryptocurrency that's out there. And we have notifications from the ETH Finance subreddit, which I mentioned before, like I think is really the only consistently good quality subreddit that I'm aware of that's out there. A lot of them are not good. So I was looking over this a little bit earlier today. I mean, as mentioned, like Bitcoin's pulled back. Um, so they're probably going to be yeah, like check this out. Why is Ethereum down today? So this article is theorizing that Ether's down because Bitcoin had a sharper than expected sell-off. So I mean, that if you've traded a little bit, like you could probably assume that is what's going on. But yeah, there are going to be articles like that we can pick through to get different people's theories about like the why of what's currently happening in the markets. I also saw that, okay, where did it go? Oh, we have some FTX news. Yeah, I think he's being they're going to sentence him on March 28th, this says. So victims are in court discussing the irreparable harm that he did to them. So that's still not entirely wrapped up. This is the piece of news I thought maybe we could talk a little bit about, because it's a meme coin called Slurf Soul. And I started reading this article and then I just started to get annoyed, so I stopped reading it. But it's worth talking about meme coins. Solana is another blockchain, an Ethereum competitor. They've had issues with quality of the products, quality of the ecosystem. I personally don't believe in Solana and have not had an interest in trading it. This is a meme coin that was built on the Solana blockchain. And if you check out this article, it talks about how like they messed up and accidentally sent, I think it was, I guess we can open it up. I think they sent like, what did it say? The creator mistakenly burned over $10 million worth of Solana from investors during the pre-sale, which was yesterday. Is today the 19th? Is today the 18th? Yeah, yesterday. So in launching this project, they accidentally destroyed $10 million worth of Solana. Um, so there's that. So yeah, I was just reading this, and then it's talking about how the community is going to come together to return these funds to investors, and people were donating And I just got annoyed because it's like, how do I find these people to connect with them so that we're getting more people to contribute to something like seeds instead of some meme coins mistake that they made at launch, right? That cost an obscene amount of money. So that's an aside, and that's my own frustration that I have to work through. But yeah, as far as meme coins are concerned, it can be worth, in terms of actual profitability, it can be worth trading them if you're aware that something's going to launch. You can keep an eye on the news, and Reddit's probably an even better source, I'd say, to get a sense of like when pre-sales are expected. Pre-sales were way more common in past years. In 2017, that was sort of the year of what was then called the ICO, the initial coin offering. And that happened because Ethereum was becoming more popular. It had addressed some technological issues that they had in 2016, and they had to hard fork the chain. And once that was addressed, the Ether price started going up. And then a lot of projects felt like, I guess, it was safe enough to build on Ethereum. Um, so they did that in 2017, and there were a lot of new projects and a lot of pre-sales, and these ICOs, initial coin offerings, where these cryptocurrencies would then launch on centralized exchanges. Um, and there were centralized exchanges back then, in part because Uniswap, which solved this liquidity problem that we talked a little bit about the last time I did a live, if you were here, um, Uniswap wasn't introduced until November of 2018. So it was like the following year. So yeah, we had these ICOs, and a project would put up a pre-sale, as this one apparently did, and they'd offer the coin at a lower price, and users would assume that there was then going to be this initial coin offering on a centralized exchange like Gemini or Kraken or whatever. There were more centralized exchanges around at that time. And the idea was that, you get it cheaper in the pre-sale, and then you'd sell it whenever it launched on the exchange, unless you believed in the project longer term. So that hasn't happened nearly so much since that moment in the like 2017 cryptocurrency market cycle. We hit all-time highs in that cycle in around December of 2017. So that's like 2 cryptocurrency cycles ago. So you can catch these sometimes if you're watching for them in the news. Sometimes this can be a good trade. I mean, it says here that Slurf is worth 79 cents. Um, yeah. So, I mean, if you got in the pre-sale and you paid less than 79 cents, you could make a quick profit in something like this. And even if it seems like it's like kind of a shoddy project, like this one sure looks like it is to me, and even if it's like a stupid meme coin that, like, I don't know. I mean, some meme coins are some meme coins okay? I could go into a tangent about Doge, I guess. Um, and I'll talk a little bit about Doge. Okay, so you probably heard of Dogecoin, I assume. Doge was introduced in December of 2013, and it's literally like a fork of the Bitcoin ecosystem. It's the same code uh, that was then used to create this alternate ecosystem, which was based on the Doge meme that was popular in 2013. I knew the co-founder of Doge a little bit, this guy, Jackson. He was an Australian socialist, and it was literally supposed to be a joke, right? In December of 2013, that's when things were starting to approach all-time highs for that cycle, which they hit in January of 2014. Bitcoin hit around $1,100 a coin. So Doge was introduced in December of 2013, right? And it was a joke. And the fact that in the last cycle, I don't know if some of y'all might have been like aware of this and paying attention to it, and it was like widespread news. But then, like, 2 cycles in the future or whatever, we have like Elon Musk tweeting about it. I remember seeing the New York Times actually reported that Doge was Elon Musk cryptocurrency, which was really annoying that they got that so wrong. And it became this thing, and like Jackson was very put off by this. I only hung out with him maybe like 3 times or something, like 10 years ago in San Francisco. And his girlfriend was like this anarchist feminist, and like they were they had this sort of more radical sensibility that is, I think, less and less common in the States in that way. Yeah, so he was like horrified that this happened. And Doge is like the original meme coin. So when Doge started to gain more popularity in the last cycle, largely because Elon Musk kind of hadn't been exposed yet for what he is to the mainstream, there were like these copycat dog coins and whatever. And if you time the trade well, if you saw that there was a pre-sale happening, or if you saw that there was going to be a lot of hype, then maybe you could get in and the price would come up and you could sell. But like it's sort of something you want to be careful with, and it's not necessarily, they're often not profitable. You can often get into the trade and end up missing the movement, and then you're stuck with this thing that actually is shitty, that doesn't have real value. And yeah, and just the existence of those. I mean, some of it is cool as like a sociological exploration, I think. Um, and that's exciting, and it makes me think about what happened with like Wall Street bets in the last cycle around 2021. And I don't know if you're not familiar with that. It was people kind of organizing on Reddit to fuck over hedge funds who had shorted, it was like GameStop and AMC, the movie theater chain. And they'd shorted these stocks, right? It was COVID, like people couldn't go to the theaters, and GameStop, I guess, wasn't doing well either. And because these hedge funds had shorted those stocks, that meant that they had sold at a higher price, assuming that it was going to drop, and they would buy back when it came down to a lower price, and that's how they would make the profits. But the people who kind of came together through Wall Street bets, and it was happening on TikTok too, people were talking about it. Um, yeah, people bought up those stocks, and it forced the hedge funds to liquidate those shorts and lose money, which was cool. It was like this cool instance of the people coming together to do something to kind of like knock over these people in power who were disrupting something that was sort of, like artistic, like movie theaters and games. Um, so that was exciting, but that kind of got mixed in with like Elon Musk and Doge. And man, I got some of the worst internet hate I've ever received during that time period, because I would make TikToks about how like people were conflating buying Doge and fucking over hedge funds. And I made TikToks that just said like, yo, like Doge is a different thing. It's not a stock. Like I think Elon Musk is sus and whatever. And especially then there were so many people on the internet who were really into defending Elon Musk. I got like more death threats than I've ever gotten in my life, which was kind of horrifying. So that energy can exist in these sort of meme coin circles. So I felt like I'd share this because there was this sort of like relevant news event with Slurf Soul. And again, it's money is a neutral thing. It isn't morally bad to trade something that looks like a shitty meme coin and make some profit off of it and use that for whatever you feel is appropriate for you. But I don't know, I feel like I should contextualize that a little bit, because there's the other thing is like, because we're coming into this sector surge, the cryptocurrency markets are heading back up again, and Bitcoin has already broken its all-time highs 4 times in this cycle this early. um, we're going to see more meme coins. There are going to be more cryptocurrencies that are introduced, because that always happens when the cycle starts heading back up. So it's like something that it doesn't hurt to start thinking about and preparing for a little bit. Excuse me. So here's our halving countdown again. The predicted date of the Bitcoin halving is now back to April 20th, which again is the precise date of the Jupiter Uranus conjunction in Taurus. So that's kind of cool. Yeah, so it's 30 days away now. Um, so it's coming up. We got a month to go. All right. So if we're looking at these markets, I'm like losing my chat. Okay. Tin Top says centralized exchanges are like public bathrooms. Get in, do your business, wash your hands, and get out. Never store coins with them. Yeah, that's a good analogy. Yeah, I like that. Yeah, so looking at this, I'm just going to say, it's a pullback, right? There was a sell off. Things went up. According to this graph, we got up to almost $74,000 a coin. This looks like it was 73,797 or so. And now we have a pullback. And it looks like it's been hanging out around 65. And it got down there around March 15th, so a few days ago now. And it looks like it's been bouncing off of 65 a bit since. So it came back down to about 65,000, retraced a little bit, but couldn't get back above 70,000. And now it's hanging out here. So to me, looking at this and using a little bit of technical analysis, which helps us determine price floors and ceilings and where it might be good to buy and when it might be good to buy, it seems kind of encouraging in the sense that it's already been a few days that it seems like it's been bouncing off of 65,000 or so. Let's zoom in a little bit on this graph. Okay, yeah, if we get in, this is now the 6-hour graph. I was looking at the day graph before. This shows us that it's actually dropped a little below that, or more than a little below that at 62.5. And now it's back at about 65. So this graph, let's get in a little bit closer. This is the hour graph. So this makes it look like the floor is at more like 63 or so. And now it's back at 65. So, I mean, generally in like a more meta sense, it's a pullback, right? So if I want to trade Bitcoin, which I don't want to do right now, if I did, I would generally be thinking like it's 30 days till the halving. You know, things are already so bullish. This looks like an awesome opportunity to buy. And then I just want to try and get the best price that I possibly could. The thing about technical analysis and kind of just looking at the graphs at a glance to get a sense of where you might want to execute trades. One thing about it is that if we're seeing higher highs and higher lows, you know, we can trust that the market is trending upward. If we're seeing lower lows and lower highs, then it's an overall downward trend. So in a relative sense here, we can see that this was actually a lower low at like 62.5, because back here the low was 65 before it bounced. And now the question is like, oh, is this a lower high where it can't get through 65 right now? It sort of does feel like that to me. I think trading this, I think I'd try to put in a limit order a little bit above 62.5. The reason for that is if you go a little bit inside the market, you're likelier to get filled if the price bounces down there. So maybe I'd put in an order around 63,000 or something, or a little bit above 63,000. And again, you know, like with limit orders, they're not necessarily going to be filled because the price may not bounce back down to that level like we're hoping it will. And even if it does, it won't necessarily execute the entirety of the purchase that we want to make. We can get partial fills. So I think that's how I'd approach this right now. And I'd also want to think about, like, to my knowledge, there aren't any other upcoming news events that are sort of well known in the sector, you know, like in the way that we had the Ethereum Dencun update last week. I would imagine that that probably held the markets off from retracing because people were waiting to see what would happen with the Dencun. And then once that was pretty seamless, then people figured they'd take profits. We don't have anything like that coming up until the halving that I'm aware of, at least. So it might hang out for a little while. We'll see. But yeah, I think I'd just be trying to buy at the best prices I could with limit orders a little bit inside the market. Yeah. Let's take a look at Ether. So yeah, graph looks pretty similar to what we were just seeing in the Bitcoin market. It's trading at right about 33 right now. And it got up to right around 41. And this was, I think we saw this last week in the live. This was like, I think this was what? This is slightly before the Dencun upgrade, because that was on the 13th. Yeah, so this is a pretty substantial retracement, actually, percentage-wise, in Ether. So it's down like $800. Um, yeah. So as some of y'all know, I like Ether. I'm much more interested in trading Ether. So I'd probably want to try and load up down here. So in like referencing the percentage retracement, because this is a bigger drop for Ether than it was for Bitcoin in terms of percentages, right? So this makes me think that Ether might be likelier to retrace and head back up more quickly. Because a lot of times what you'll see in the markets is, if there's a steep drop quickly, there's likelier to be a steep movement back upward quickly as well. Um, that's where like you'll hear that term bounce. The price comes back down and shoots back up in a relatively short amount of time. I mean, this is, like gradual. It's fairly gradual. This is over the course of a week. But this is a pretty big, it's a relatively big retracement. So I might, if we look at this longer term graph, yeah, like 3250 was a bit of a price level back here, it looks like. And if something was a price floor or ceiling, it was a significant price level in the past, it's likelier to be a price level in the future. So 3250 looks like it has some significance. Um, hmm. Yeah, so I think I just watched this. I try to scoop some around 3250. Maybe I'd put in some limit orders like just above 3000, like 3050 or something like that. So it's a little bit inside of that price to see if I can't catch a bit more of a drop. Yeah, and then see if we get that retracement. Yeah, the other thing here, yeah, I mean, it just feels like there's more potential here to me to scoop this and then see a bigger surge upward than what we could see in Bitcoin right now. Um, yeah, and the halving again is 30 days away, and whatever happens with the halving is going to affect the market overall. So, and Ether hasn't broken its all-time highs yet, which were again around $4,800 a coin. So that could be a significant like profit for making $1,500 a coin if this goes back up and tests highs. Yeah, so I mean, I'm consistently trying to put money into Ether in various ways. With this, I think I just put in more limit orders and try to catch this. Okay, I feel like I'm being redundant. Yeah, so there's that. This, like, I should say too, though, I'm feeling like I want to watch this more closely. Um, just feels like there's more activity in Ether and there might be something interesting going on here. Yeah, so there's all that. I wanted to also take a look at, Ginny says in the chat, oh my God, death threats over Elon Musk and Doge. Yeah, like the crypto sector being shitty to women, like that's like the pinnacle of it, I feel like. People so mad that I was like, yo, like Doge isn't doing this thing you think it's doing. And Elon Musk, I mean, that's very, I feel like 2021, like, I don't think people are defending Elon Musk like that anymore. But yeah, that's when I talk about the shitty energy in the sector, like, that's such a key example, I feel. Um, all right. So I thought I'd talk more about DeFi today and actually hop into Uniswap and explore it a little bit more than we had in previous sessions. So let me pull that up in OBS. All right. So the first thing that I don't think I've stressed before is that it's so essential to make sure you're going to the correct site when you're using a decentralized trading platform, any kind of decentralized tool, really, like Uniswap, anything that you might connect your self custody wallet to, because the sort of more recent phishing attempts have involved people creating like fake versions of the websites to try and trick people to go to the fake versions of the sites. Sometimes you see this on Twitter where like maybe someone would be having some kind of issue with Uniswap and they would tweet at Uniswap and then someone would reply and say they'd have like a handle that said like Uniswap support or something, but it was fake. And they would say, oh, we can help you click on this link to fill out a support ticket or something. And then the link would be a phishing link and you'd be tricked into connecting your wallet to that fake site. So it's a good idea to bookmark pages like this, decentralized platforms that you're going to use to make sure you're going to the correct site always so that you're not susceptible to that scam. It even happened, we had this like, it was a single mother who had been homeless, and she'd redeemed a seed to ask for help. She was living in Chicago. She redeemed a seed to like get housing, and our community was able to help her like pay for a new apartment. And she was unfamiliar with cryptocurrency, and she was like doing such a good job trying to like figure out how to use the tools, figure out how to use DeFi tools. And she had an issue with Uniswap, and precisely what I just described happened to her. She tweeted at Uniswap, so she was being proactive about trying to solve the problem. Somebody replied and was like, "Hey, you should go to this link and we'll help you there." And she did, and they stole all that money that like we'd just given her. So we gave her the money again. But I was just like so livid that these scammers, it's just like to me is again, it's an example of that toxic masculine energy harming the feminine energy that we're trying to cultivate in seeds. So try not to ever make that mistake yourself is what I want to say. And a way to do that is making sure to bookmark the platform. So their URL is app.uniswap.org. So here I'm in the Explore tab. So this is getting bigger. Uniswap TVL is total value locked. So this means that a total of $5.26 billion worth of cryptocurrency is locked on the platform right now, which means that it's been staked on the platform. So that's a lot. It was hanging out at 3 for a while, as I recall. We can go down here and take a look at different tokens and different pools to see what's going on. I should mention, like, it's worth mentioning that, like earlier, I referenced Solana, for example, and talked about how I don't think, like, it's not a project that I think is of great quality, so I haven't wanted to interact with it in any way. Uniswap, as touched on before, is built on top of the Ethereum ecosystem. And once people saw that this solution worked, that Uniswap had figured something out, there were copycats of Uniswap that have been created on like other blockchains, including Solana. I don't know the name of Solana's Uniswap equivalent, but I wanted to contextualize this and make sure to share it. Like any project that is taking what Ethereum figured out and trying to improve upon it in some way with cheaper transactions or whatever. The Binance version that I'd mentioned before, Binance Smart Chain is their Ethereum copycat. Pancake Swap is like the Uniswap copycat that they made on that chain. And again, like I think you should definitely steer clear of Binance things, particularly their DeFi platforms. I'm just sharing this so that you're aware that like there are versions of this that exist on different blockchains. There isn't one like this built on top of the Bitcoin blockchain because Bitcoin wasn't designed initially with the intention of making it easy to build stuff on top of it. That was the progress that Ethereum made in introducing their solution years later. So yeah, Uniswap, I think it's pretty much not, I don't think it's debatable that Uniswap is still like the premier DeFi exchange, but it's built on top of Ethereum, and there are going to be versions like it on other platforms. So if you're ever looking for a particular cryptocurrency and you can't find it on Uniswap, that's going to mean that there isn't an Ethereum version of that cryptocurrency. And then like if we're looking at, for example, here, we're looking at pools, we're seeing a ranking here, right? So this is ranking in descending order based on total value locked. So there's $500 million, over $500 million in this single pool on Uniswap, the WBTC Ether pool. WBTC is wrapped Bitcoin. Um, so that means that somebody made a version of Bitcoin that could work on the Ethereum, um, within the Ethereum ecosystem. So this is like the Ethereum version of Bitcoin. And sometimes there may be price variances between WBTC and like actual Bitcoin. So, excuse me, you can pay attention to those. Sometimes you can make trades that take advantage of those differences. It depends on gas fees and stuff like that, though. But yeah, I just wanted to make sure you had an awareness of what that was. Yeah, and so this is the biggest pool. This is the number of transactions in, I don't know if this is 1 day or 7 days, in some amount of time that they're not specifying here. We can click on this and look at the pool. Okay, so the 24-hour volume is 84.4 million. And this is worth looking at if you're considering staking your cryptocurrency, which again, I would always encourage folks to do if it's just sitting and chilling in your wallet. Again, you might as well stake it, which is not without risk. There's nothing in the world of cryptocurrency that is without risk entirely. But yeah, like I've said before, if you're not staking, it's kind of like hiding your money under your mattress, stashing cash under your mattress. So when we're looking at these rankings of various pools, if we're trying to think about staking strategies, looking at the volume can be a helpful tool because this means that this amount of cryptocurrency has been traded in that time period, in this 24-hour time period. So this amount of fees, $253,000 worth of fees, has been generated in this particular pool in 24 hours. So you can see that and realize that if you're choosing to stake in that particular pool, you're going to get a cut of those fees. So if there's a lot of volume, more trades are taking place, more people are paying fees, you have a likelihood of garnering more in fees. So that's why that's worth paying attention to. Um, hmm. Pool balances. Should I go into this? I'll try. This is interesting. I hadn't seen that this was here before. To try and better explain staking, I should backtrack first and say that I'll go back to the chat real quick. Tintop says, so sad. There are plenty of ways to make money in crypto without stealing from people. Yeah, I was very sad when that happened and also furious, which has unfortunately been my experience too often in crypto. But yeah. Okay. So yeah, if we're looking at this though, and I'm talking about staking and what staking is and how to benefit from it, something I should really make clear that I realized I haven't made clear enough in the past is that there are other, like that word is being used now inappropriately. And I think it's misleading people. Like I was looking at my Coinbase self-custody app earlier today, um, and like wishing that there was a way to get it on the screen for you more effectively, but y'all, okay. Maybe I can show you here. If I just go back in here real quick. All right. If I go into my Coinbase app, you can kind of see that. It's reversed though. But yeah, if you go into your app and you click on stake, it's telling you that with Ethereum, it's giving, you can't see that, it's reversed. With my balance, it's saying that I could earn a 3.52% APR if I choose to stake within this app. And then they have something else that they're calling liquid staking. So like if you actually explore this further, I guess I'll jump back into Uniswap. If you're using the Coinbase self-custody app and you check it out, you'll see that it can take up to 1 business day for them to return your stake if you're choosing to unstake. When you see something like that, then it's not true staking. It's not actually staking in DeFi. It means that you're giving your money to a centralized platform and they have control of it. And you have to wait for them to do stuff in order to get your money back. Then they had something that they're calling liquid staking, in which you can choose to use that option and then like get your funds back immediately if you choose to unstake. So it looks like liquid staking. I haven't actually done this because I don't want to mess around with centralized things in this way when it comes to staking. But my understanding based on looking at the tool is that they're calling it liquid staking if it's like actual staking. So just be wary of that. Um, because centralized entities, like to be clear again, Coinbase Wallet is a self-custody wallet. I have, I think I have a mnemonic associated with this wallet rather than a private key. But like, for example, last cryptocurrency cycle, there was this platform called BlockFi that went under and a lot of people lost their money. And as I understand, they were claiming that you could stake on their platform. So people thought they were staking. It seemed important to stake. Ethereum was moving to a proof of stake consensus mechanism. That's a different form of staking if you're an Ethereum validator, which I'll talk a little bit about. Um, it's a different thing. You're putting up Ether to secure the network, to secure the Ethereum crypto network. And that isn't the same thing as staking in a decentralized pool on a decentralized platform like Uniswap. To be a validator, you needed to have 32 Ether. And I think what platforms like Coinbase are trying to do, where they say you're staking and they say they're going to give you a 3.52% APR. I think they're putting this in some kind of pool in which they have X number of validators, like Coinbase is putting up 32 Ether per validator, and they're taking customer funds to do that. But it's a different thing. So just like be wary of that, and be aware that definitions in the cryptocurrency sector can change and have changed. And sometimes terms are used in ways that aren't necessarily like, I don't trust the fact that they're using these terms. I think that there could be more clarity in the way that they're communicating this. And I already don't trust Coinbase. And yeah. So when I'm talking about staking and when I'm encouraging folks to look at staking, what I mean, and what I think is best, like it's kind of cool if you can be a validator, if you have 32 Ether to contribute to that. The returns aren't going to be that great now. And there are other pieces of that that are maybe problematic. Um, like in a philosophical sense, when Ethereum shifted from proof of work, which requires mining, that's what Bitcoin does. Ethereum shifted from proof of work to what's called proof of stake, using these validators instead of miners. And they did that successfully with the merge in September of 2022. So that's great for the environment in that it cut down on the energy consumption needs of the network like by 99% or better. Um, However, that means that it's like rich people at this point. If somebody has 32 Ether that they can just put toward becoming a validator, they have this disposable wealth that they can put toward that. And maybe they were mining Ether early, so they got in early and it wasn't something that happened because they had a lot of capital to put into Ether. Maybe they were just part of the ecosystem and they were rewarded. But at this stage, it just like, I don't know of another project besides Seeds that is trying to solve this problem of like it taking money to make money slash like rewarding wealth to that extent with more wealth. Because when you're a validator, then you're earning fees from the network when people are paying transaction fees on that network. So yeah, that's the thing with Seeds, like this idea that you can redeem a single seed to get whatever amount of money you need, like redeem a seed to ask for $2,000 to cover your rent, if anyone still has rent at that level anymore, or whatever it is. I think there's something interesting about that, where you're effectively like stating the value of what a single seed will be worth for you, and the community has to agree to that and contribute that towards your need. But that to me just feels on trend with, I don't know, like increasing personalization that we're moving toward, like generally in society. So Seeds is trying to present a better solution. It's not totally solving the problem, obviously. Um, that idea of you needing money to make money. The Ethereum validator system and staking and needing 32 Ether, although you can contribute to pools to also be a part of that if you have less than 32 Ether. It's just like systematically, it's not solving that problem. We're working to solve that problem. And that's been a criticism of it. So I wanted to share that. But yeah, whenever I'm talking about staking, as mentioned, what I think is most advantageous for traders like us, like you and I, it's probably going to be this like messing around on a good platform, good enough quality platform like Uniswap, to look at different pools, to stake in those pools, to earn fees, and then you can get other benefits as well. So airdrops can often come because you staked, free money that's just given to you, and then there can be staking bonuses as well. Seeds has a staking bonus if you stake in the Seeds pool that you can receive, and that can all happen in addition to what you're earning in fees. So if you're staking as a part of a validating pool, if you're contributing to a validating pool, there are other projects. I feel like I'm getting off on too much of a tangent, but there are other projects relating to being a validator that you can be a part of. I guess I touched on that already. We can have a more in-depth conversation about that, I think, another time. But this is probably going to serve us better and earn us more in funds, is what I'm trying to say. Yeah, so again, we can look at the different pools to see the volume, to get a sense of where it might be most beneficial to stake. Um, we can look at this too to see like, so this like 0.3% here, that is the fee that traders are paying to execute trades in this pool. Here it's 0.05%. So this is a stable coin pool though. USDC is a stable coin, which is trades that it's supposed to consistently be $1. So sometimes in stablecoin pools, you'll see this lower fee amount. So you can take that into consideration as well when choosing a pool to stake in, because if the traders are paying less in fees, you're earning less in fees as somebody who's staked in that pool. So yeah, it can be an interesting tool. It can also be, as I mentioned briefly before, excuse me, it can be like a discovery tool for cryptocurrencies, because if you see something on Uniswap, I feel like this is slightly less common now, but it still happens. You can find cryptocurrencies on Uniswap, and you might be able to catch them when they're trading on Uniswap before they then launch later on centralized cryptocurrency exchanges. And that can be a way to get in early and then potentially benefit, because a lot of times when a cryptocurrency launches on a centralized exchange, the price goes up a lot. Yeah. Speaking of meme coins, here's Pepe. So here's their pool, the Pepe Ether pool. And I should talk a little bit about what this even means, like why we have these cryptocurrency pairings. Um, so I will do that. Yeah, check this out. This is just a stupid meme coin, and it's got decent volume, and it's moving on here. So, and you can see the transactions here as well, the size of the trades and so forth. So there's that. Cryptocurrency pairings. So when we're looking at pools, we can see that everything is in a pair, right? We had the WBTC Ether pair, USDC Ether, and so forth. Everything is a pair. So this is a solution. I've touched on this in the past. Sorry if I'm ever being redundant, but to try and clarify this for anyone who might not know. So the genius, I think it was such a smart solution, the genius solution that Uniswap figured out so that we could actually have a decentralized exchange and no longer have to exclusively rely on centralized exchanges run by people like the Winklevi, is this pairing structure for pools. So Hayden, I can't remember his last name, Adams, maybe, the founder of Uniswap. I guess he was thinking about like, I think he had a background in thermodynamics, and he was thinking about like the movement of heat and air, and that helped inspire the solution that Uniswap presents. But it was this idea of like, well, what if Ether functions as sort of like the mediating cryptocurrency? So then we could have people just create liquidity pools on the platform so that there's enough liquidity there, enough of the cryptocurrency there for traders to execute trades successfully. And we could do this through pairs with Ether. So, like, for example, if you wanted to trade any of these cryptocurrencies, say you wanted to trade DAI, DAI, for seeds, right? In order for that to work on Uniswap's platform, there would have to be, uh, we'll use Ether. It's interesting that this isn't the Ether pair that's so popular here. We would need like a DAI Ether pool, which presumably people with a lot of DAI would start on their own, and then like the seeds Ether pool. So then when you're executing the trade on the platform, what Uniswap would actually do is trade your DAI for Ether and then trade that Ether for seeds in the seeds Ether pool, and then you get seeds. So it was smart because, Ether, the Ethereum network, was again designed to allow for projects to relatively easily to be built on top of it. So there were all these projects that were built on top of Ether that could pair with Ether. And that's why we have this pair structure. If we look at this again, and I feel like I should backtrack and say again, like if this seems like too much information, like a fire hose of information, try not to feel stressed out or anything. Again, it can just seem that way in the early days when you're starting to trade cryptocurrency more. And you'll pick up more bit by bit, and then eventually everything will seem more clear. And I'll try to do my best to better explain things if I'm not doing that well enough. Um, God, Bryce says, yeah, I staked $15. I went to 37, now at 19, and says I need $62 to unstake. Bri, I was wondering what platform you're using to do that. I assume that you were using, like, you were doing that within Coinbase Wallet in the example that I showed, like, where it has the 3.62% APR. Let me know if that's not what you were using to stake, though. Jenny says, I like what you said about people saying what one seed means to them. That makes sense to you. That's exciting, Jenny. Thanks for saying that. Yeah, it feels better to me. It makes more sense to me, too. And something about this idea of being locked into a certain price by external forces is, I think, of the older energy. It's something we're shifting away from. It's related to that or somehow. I don't feel like I'm articulating that idea very well, but yeah, that's how I feel too. Got Bryce's Coinbase wallet. Yeah. So did you use like the general staking thing, Brian? Like the thing I showed before where it says 3.5, now it says 3.52% APR? Or did you use liquid staking? Got Bry. Um, so let me know in the chat whenever you get a chance. Um, to talk about pairings a little bit more so that hopefully this is more clear. Another thing that it's good to be aware of, and it's part of the complexity of staking though, is that like, okay, if we're looking at this again, I'm showing you the right thing, aren't I? Yeah. Okay. Got Bryce says yes. General. Yeah. Yeah. That's a bummer. Yeah. So they're still making you pay fees for that, which is shitty of them when it seems like they're holding custody of your funds anyway. Yeah. Sorry, Brian. I mean, again, like I said to you in the Discord yesterday, like the reason the price is down is because Ether is down right now. And it's, helpful to understand, like when we're staking, of course, we're holding the funds in cryptocurrency in their entirety. So like, even if we've made a good amount in fees, like if Ether itself is down, the fees are going to be worth less than US dollars because the markets are down, right? So Got Bryce says it shouldn't let you stake. If you don't have enough to unstake, then it can just eat at your Ethereum, seems like to me. Yeah, they don't, I mean, it would be good if they had those predictors, but they also don't know, like, not to defend Coinbase, but they don't know what the gas prices are going to be. So if they're, presumably that's based on the gas fees of the Ethereum network. And they don't know if they're going to be insane in the future. And I'll talk a little bit more about ways we can address this with L2 layer 2 solutions here in a little bit. Yeah, so like not to defend them, but they don't necessarily know what the gas price is going to be at a certain moment in time in the future when you'd like to stake. But you're totally right that they should and could do a better job of making sure you understand that before making the decision to use their tool, which I don't think they're making very clear at all. Yeah, sorry about that. Um, but hopefully it'll go up enough soon. That's the thing. That's why people gripe about this, and it's a legitimate gripe that the gas fees are so crazy. But like you can make so much in profits that can make even these egregious gas fees, even though they're stupid and painful, like relatively seem not that bad. So that's the reason there hasn't been like mutiny so far. And then layer 2 solutions are trying to address these gas fee problems. So yeah, I'll talk a little bit more about that in a second. Let me talk about this pairing, and then I'll talk about that, and then we should go because it's getting close to noon. Okay, so to try and explain this piece of the way pairs in liquidity pools on Uniswap work, if you check this out, you can see that the pool balance is much less Bitcoin than it is Ether right now. Let's see if I can explain this succinctly. So when you're making trades, it'd be better to show you a swap probably. So when you're swapping for any token, like say I wanted to trade Ether for WBTC right now, you would do this here and you'd put in the amount that you want to swap. You connect your wallet up here, right? There's like nothing in this wallet though. Nothing, no Bitcoin or Ether anyway. For the sake of example, though, I'll just use this because we were just talking about this pool. So when the markets are going up, and again, if we're looking at what we were looking at initially with the Bitcoin and Ether price, like we can remember that we saw that relatively speaking, Ether has come back down more so than Bitcoin has in terms of the percentage decline, right? So that means that people have been selling Bitcoin less than they've been selling Ether. When we're looking at what's going on Uniswap, so that means the trades that were executed here, involve people selling Ether more than they were selling Bitcoin. And because it's a pair, if people are selling more Ether for Bitcoin, they're taking Ether out of the pool. Right? Did I say that correctly? Yeah, they're selling Ether. So they're adding Ether to the pool and they're taking Bitcoin out of the pool. They're selling Ether for Bitcoin if they're making this particular swap. And you can reverse it if you wanted to. And this is also going to execute a trade in that same pool, but it's the reverse. You're adding Bitcoin to the pool and taking Ether out in this case. So in instances where there's more of one cryptocurrency than the other, it's because in that particular moment in time, that cryptocurrency seemed more attractive than the other cryptocurrency in the pair. So that's why we're seeing that there's more Ether in this pool right now and less Bitcoin. So we'll see that with different pairs. Just to briefly touch on this before I talk a little bit more about layer twos. Yeah, we'll go here to pool. So if you want to stake, so here you can see that I have a stake position with this particular wallet that is currently out of range. We can make a new position if we want to. We have to, again, remember that gas fees are insane right now, so it has to be worth it to stake. It has to be worth it to make a position on the Ethereum mainnet. Like we talked a little bit about last time, we can switch to different ecosystems, different layer 2 solutions like Arbitrum and Optimism. These exist. And again, like with the Ethereum Dencun upgrade last week, that was about making these cheaper, making these layer 2 solutions cheaper because of the way data is now stored on the Ethereum mainnet. So we can use these to execute trades more cheaply, like way more cheaply, often for pennies. However, when we're using layer 2 solutions, and this is going to be true on any blockchain, Ethereum's just more expensive now than other blockchains. And that's the reason so many Ethereum competitors have appeared. It's a big part of the reason because people were like, Ethereum is too crazy expensive. We need better solutions. Like Pulse Chain is an example of one that was created that I believe they just forked Ethereum. And the idea is that like it's cheaper to use this. But by design, they're going to have the same problems eventually because if enough people are interested in the network and buying up the cryptocurrency, then the fees are going to get more expensive just through the life cycle of the cryptocurrency. So the sort of very imperfect solution that has been presented, like a lot of these projects popped up, well, some of them popped up in the last, I don't know, 4-ish years or so, is to have these layer 2 solutions that are built on top of Ethereum, and they're much cheaper to use. However, in order to get to layer 2, you have to leave layer 1, which is the main net. So you still have to pay layer 1 gas fees, the same shitty too high gas fees, in order to get your cryptocurrency onto a layer 2 um, protocol, I guess I could call it, like Optimism. Once you have your cryptocurrency on Optimism, you can execute trades for pennies. But then I don't think, like, for example, I don't think there's currently a way to move, like, if you moved Ether onto Optimism, I don't think you can sell that Ether on a centralized platform, which could save you some money. I don't think they have the tech for that yet. But correct me if anyone knows if I'm wrong. So that's why the solution is imperfect. You still have to pay that ridiculous gas fee in the first place to get onto the layer 2. So it can be worth it. And you can plan things so that you're taking advantage of, like executing a trade when gas prices are lower. You can try to time that. But yeah, that's the thing about layer 2s, and it leaves a lot to be desired in terms of solving this annoying problem that we've all dealt with for a long time. Yeah, so if we were staking here, let's see. I think it's almost out. We're almost out of time, so I won't use seeds as an example. If I were going to use seeds as an example here, I'd have to copy and paste the contract address for seeds, which you can find in our FAQ if you wanted to stake your seeds. We'll just use this because we've been looking at this example. So if we're creating a position, if we're staking here, We have to select the cryptocurrency pair. We select the fee tier. The 0.3% fee tier is the highest. And we can see here that that's what the majority of people select. And we can also recall, like when we were looking at that list of cryptocurrency pools, we could look at that list to see which particular pool was more highly ranked based on trade volume and so forth. And this is the number one pool that we saw, right? This Ether WBTC pair at the 0.3% fee tier. So then I think it's slightly less confusing if we switch the order, because then we can see the value. We can see like Ether per Bitcoin down here, which I think is a little bit easier to like more immediately grasp in terms of the concept of that value. So, okay, this is worth touching on. I feel like I'm kind of opening up a can of worms a little bit that I won't properly take care of today because we're so close to being out of time. But I'll try to give an overview and we can talk more about it in future sessions if y'all want to. So, okay, when we're staking, like when you saw that I had an out of range position when we first came into this, that meant that the price range that I'd selected here, trade was no longer taking place within that price range that I had selected. So you can take a look at this and change what that price range is. And the ability to do this this is Uniswap version 3. Uniswap version 4 is supposed to go live later this year. This was new for Uniswap version 3. Previous to this, you couldn't establish a price range or anything. You would just stake. It'd be a one-to-one relationship. You would stake $100 of Ether and $100 of Bitcoin or whatever. Down here, we'll see that there'll be different deposit amounts depending on what our range is. When Uniswap version 3 was introduced, and this is definitely like a more advanced technique. So if you're like a total beginner, this is something that you would come to after developing a little bit more in your trading, in terms of your confidence and your experience and so forth. But what we can do on Uniswap v3 that we couldn't do previously on earlier versions of Uniswap is we can leverage our capital by choosing to stake it in narrower ranges. So in this way, we could stake $1,000 worth of cryptocurrency in a narrow range and get the same benefits that we would have had to stake $10,000, say, worth of cryptocurrency in order to receive on earlier versions of Uniswap. It allows us to stake in a narrow range and earn better fees, essentially, for staking in that narrow range. The risk there are that, like, this can be a super good way to, you can earn some crazy fees for real, particularly in really high volume pools like this one. You can also earn, as I mentioned, airdrops and fees. Airdrops and staking bonuses. And I mentioned the seed staking bonus. Like we had a super generous staking bonus for many years, and it's still generous today. And the idea there is that there isn't a lot of trade volume yet in the seeds pool, so you're not going to earn as much in fees, but the staking bonus is meant to like offset that. So you're not going to get a staking bonus in a giant pool like this, but that's another piece of your strategy that you can keep in mind if you know about a project offering staking bonuses, which are less common now, but they still exist. So you want to choose your range. This graph here helps you get a sense of how much liquidity has already been staked in that range. So we can see that the vast majority of the liquidity on this platform in this particular pool, the WBTC Ether pool, is in this price range here. And this gray line here on the graph is showing us where the current price is. So the narrower your range is, the more you're leveraging your capital and the more you can earn in fees. But then also you run that risk of trade going outside of your range. And if it goes out of range, then you're no longer earning fees. It can come back into range and you'll start earning fees again. But if you want to continue earning fees and it hasn't come back into range, that means you have to unstake and then restake in a different range. And then you have to pay gas fees both to unstake and to restake, which can totally obliterate your profits and not at all be worth it. So these are like the various factors that we have to consider when we're staking. Yeah. So you would choose, let's see if it'll let me do something down here to give you a sense of the differences in amount. Yeah. We'll say it's like a huge amount. If I have like, what is this? $55,000, $53,000 worth of $54,000 worth of cryptocurrency to stake in this pool. And I wanted to stake in this specific range. This is the deposit amount that I would have to stake. And that's going to vary depending on your range. You can see how that changes. Yeah, so there's complexity there. And you don't, it's like when you're just trading on a centralized platform like this one, like if we're looking at Gemini again real quick, it's like I think of staking as sort of like a multi-dimensional way to trade. There's just other considerations. Like here, if we're trading, we're looking at like, okay, I want to try and buy again, maybe at 63,000 if I can get filled at that level, and I'll put in a limit order at that level to try to catch the price if it drops down to that level. So there's that, and that there's some for sure like complexity there, and I want to look at the news events and whatever to get a sense of what might happen there. But if I'm staking and I'm looking at this, then I'm thinking about other things. Like I'm thinking like, okay, is the price going to stay within a certain range? And I'm thinking about like not only the low price, like 63 and a half that I'm hoping it might hit before rebounding. I'm also thinking about what the top of that range may be. And the range I'm thinking about is the relationship between Bitcoin and Ether. So that was another thing I discovered. I was doing various experiments with staking on Optimism like a couple years ago now, a few years ago. And I was sharing them in like our seeds class. Like we had a specific Discord for people that took the seeds course, the cryptocurrency trading course is coming up. So I was doing these experiments, and I realized when you're staking, it's going to be helpful in order to stay in range. You kind of want to define cryptocurrencies that would move together, because if one was really moving, one was going up a lot more than the other one, you would go out of range. Because we're looking at the low price here. The low price is Ether per Bitcoin, and the high price is Ether per Bitcoin, right? So it's not just thinking about the price of a single cryptocurrency, it's thinking about the relationship of the prices of two cryptocurrencies together in that pair. So that, it's just more dimensions, I think, to think about, but the rewards can be enormous if you're able to do this successfully. Yeah. So you can mess around with that. I was finding that I paid gas fees to get onto Optimism, the layer 2 solution back then, and messed around with it. And it was easier to make profits that way, because even though I had to pay that first fee, the annoying mainnet layer 1 gas fee to get to Optimism, once I was on Optimism, because it was so cheap to pay, like gas fees generally were so cheap, often like 10 cents or something. It was just a lot cheaper to unstake and restake if something went out of range. So that was helpful. So yeah, there's just complexity. There are just different considerations. But you can also set like a wide range if you want, and then you don't have to think about it so actively. You can assume that things are probably going to stay within this range. So you're probably going to be continually earning fees. It's just going to be a lower amount of fees if you have a wider range. I hope that's helpful, and not just, I hope that doesn't just sound too complex. This isn't, as I said, something that I'd suggest, like starting with necessarily if you're a beginner. You can totally stake, and doing so can be like, beginners can definitely stake. And I encourage doing so, again, because like you're probably missing out if you're just leaving your cryptocurrency sitting in your wallet. But you could do that in a pool that you wouldn't necessarily want to be trading so actively, like this gigantic pool. And if you stake in like the Seeds Ether pool, for example, that functions as our mutual aid pool, which is what we use to help people who are unbanked in, places like South Sudan or whatever. And beginners can absolutely do that, and we appreciate it when you do that and so forth. But yeah, for something like this, it's like it's something you're going to need to look at more frequently and sort of more actively trade. So it's kind of a different thing, but I thought it would be good to talk about. Yeah. All right. It's 12:08 my time. So I think we should end it here. Okay. Tintop says, I haven't used Ethereum for a while. My positions are set and waiting for profit. There are incentives to bridge to layer 2, use the protocols and plentiful gains to be had on new projects. There are solutions. I use Coinbase to buy USDC fee free, bridge to Arbitrum fee free, use Rubric Bridge to go to Pulse Chain, Optimism. Never touch Ethereum. Yeah, that's a good point. You can use Coinbase to get USDC free. So that can be a benefit to like messing around with a centralized platform. But that isn't like that doesn't address like the problem in Ethereum, the problem that all chains have eventually. It's just like they're offering that to get around the problem. But yeah, thank you for pointing that out. Yeah, Tintop says I live in DeFi. I only use centralized exchanges for fiat and on and off ramping. Yep. Yeah. I think that's the smart way to do it. Ginny says gotta run. Thank you, Rachel. Take care, everyone. Bye, Ginny. I think you're gone. Cool. All right, y'all. I will let you go. This was an experiment today because I kind of wanted to see. I didn't like advertise this live very much. I wanted to see like what just YouTube would do, and so we had less people. But that's cool. I appreciate your time and your attention. And yeah, if you found any of this helpful and it resonates, please consider helping someone in need through Seeds at the link in the description. And we got the course coming up too. So if you want to be part of the course and support Seeds in that way, it's really appreciated. And that link is in the description as well. Okay, y'all. I'll catch you later. Bye. Okay.